Nonprofit corporations are a unique type of business entity that often confuse people. What exactly are they? How do they differ from regular corporations, and why do they exist? Let's explore the world of nonprofit corporations and uncover their distinct characteristics. A nonprofit corporation is a separate legal entity formed for charitable, educational, religious, or other non-commercial purposes. Unlike traditional corporations that aim to maximize profits for shareholders, nonprofits focus on serving a specific mission or cause. They operate under Section 5011C of the Internal Revenue Code, with many qualifying for tax-exempt status. Forming a nonprofit corporation involves several steps. First, founders must choose a unique name and file articles of incorporation with their state. Next, they appoint a board of directors and adopt bylaws. The organization then registers with state and federal governments, obtaining necessary permits and a tax ID. Finally, eligible nonprofits can apply for tax-exempt status by filing IRS Form 1023 or 1023-EZ. Nonprofit corporations share some similarities with C corporations. Both provide limited liability protection to their members or shareholders. They also follow similar initial formation processes at the state level. Interestingly, nonprofits can generate profits like C corporations. However, these profits must be reinvested into the organization's mission rather than distributed to owners. Despite these similarities, nonprofit corporations differ significantly from C corporations in several ways. Nonprofits do not issue dividends or distribute profits to owners. Instead, all earnings support the organization's goals. Tax-exempt nonprofits enjoy exemptions from various taxes, including corporate tax and often state sales tax. They also face unique filing requirements and restrictions on political activities. The tax treatment of nonprofit corporations is a key distinguishing factor. Those qualifying under Section 501(c)(3) are exempt from federal income tax on mission-related activities. However, they may still owe taxes on unrelated business income. Nonprofits must file annual Form 990 with the IRS to maintain their tax-exempt status and comply with strict regulations. Incorporating as a nonprofit offers several advantages. These include tax benefits, liability protection for directors and officers, eligibility for grants, and increased credibility. However, nonprofits also face challenges such as complex formation processes, ongoing compliance requirements, restrictions on activities, and potentially high operational costs. In conclusion, nonprofit corporations represent a distinct type of business entity focused on serving public interests rather than generating profits for owners. While they share some similarities with traditional corporations, their unique purpose, tax treatment, and operational requirements set them apart. Understanding these differences is crucial for anyone considering starting or working with a nonprofit organization.